We saw pretty muted movements, and even for China stocks, while we saw they opened higher, actually most of the gains faded towards end of the day. So traders are saying that this really is, like you mentioned, Sherry, the lack of concrete policies coming through so far. And until we see more details, what exactly the support will come from the government, investors seem to be quite reluctant to put more money onto the table. And especially when you also think about the timing, it's also towards the year end. So we are expecting less new money to come into the market unless we see stronger reasons of doing so. And now that seems to be lacking as well. And not to mention, we still see China's issues to continue, whether it be the economic issues and also property and the weak consumption. So it seems like the stimulus that have been announced so far are not as strong as investors would expect to lift the country outside of the deflationary environment so far.
We have seen a steady decorrelation in terms of China and emerging market assets, right? Does this have implications?
An economist, Credit Agricole, trying to break down what sort of policy measures we could get.
So actually, we have seen 5 consecutive months of outflows from Asia EM markets until end of November so far. So the setup for Asia emerging markets for 2025 is actually looking quite tough at this moment, especially with this big risk around Trump's presidency and the U.S. tariffs coming in. So with that inflationary environment in the U.S., we're likely to see the U.S. dollars remain quite strong, and hence potentially a shallower rate cut from the Fed. From UBS just last week saying that Asia/EM market is actually going to be the most agreed, saying that the U.S. is likely to beat all its peers next year as well, considering kind of how much they can benefit from the AI trend and benefit from Trump's presidency for the domestic market as well. So while we have that emerging markets facing the struggle from kind of the macro environment in the U.S., actually, if we can see some bright side from China's stimulus, that can potentially be one thing that can benefit the Asia EM markets. So we've got traders saying that if we see stimulus really coming in to support China's market, higher commodity prices in China can benefit countries like Indonesia.
In particular, we're seeing some downside when it comes to trading in Australian stocks. Banks, as well as some of the miners, are dragging. They're really following the incremental moves that we saw in the US session overnight. The Nikkei 225 also a little bit softer. Interestingly, some gains we see across the Kospi of about 0.7%. And certainly, if you take a look at some of the sectors in South Korea, from utilities to retailers to energy, some of the cheapest sectors across the Asia Pacific at the moment, if you take a look at forward PE ratios, and that sort of calls into the question how much the Korean discount has really deepened over the last few weeks, and whether we could see that recovery if perhaps some more of that political certainty comes to pass. But coming up on the Asia trade, we'll be hearing from one of South Korea's unions pressuring President Yoon to resign. We'll be speaking live with the striking metal workers union next. This is Bloomberg.
Compassion has guided BGRIM as Thailand's first European pharmaceutical company. From fighting cholera and supporting the government in establishing the first modern hospital, to addressing COVID-19 We're now returning to our roots in pharmaceuticals, continuing our compassionate commitment.
There are many global investors that aren't